Hey everyone, I have a habit of studying the portfolio of top mutual fund houses to identify opportunities from small cap and mid cap space. And one of the mutual funds that I closely track is Parag Flexicap Fund. It's because Parag Flexicap Fund is known for its value investment style. They don't run behind hot themes. They invest in fundamentally super strong companies for long-term wealth creation. While going through its latest portfolio, I came across a very interesting small cap addition in their portfolio. And when I looked at the shareholding pattern, I found that there is another star fund house, Quant Small Cap, that has already invested in the company in December quarter and accumulated more in March quarter. Now, Quant Small Cap is also a fund house that I closely track because it has the reputation of identifying multi-bagger stocks at an early stage and has been a top performer in its category for a long time. So on one side, you have Parag Flexicap Fund adding this company in the portfolio, and on another side, you have Quant Small Cap adding it in since last 2 quarters. This really intrigued me to study the company. Okay, company name is EID Parry. And when I studied the company, I understood the reason why Parag Flexicap and Quant Small Cap Mutual Fund have added it in their portfolio. If you recall in my previous video on IT sector, I mentioned that there are 2 key ingredients of multi-bagger stocks. First is EPS expansion and second is PE expansion. If a company shows both EPS and PE expansion, it becomes a multi-bagger. And EID Parry EPS is growing at a very good rate. Plus its PE ratio is only between 12 to 13. So there is very good scope for PE expansion. Now the first question you should ask is, if EID Parry has so much of potential, then why its PE ratio is only between 12 to 13? Especially in this bull rally when every stock is trading at expensive valuation. Why EID Parry has such low PE? And the answer lies in its business model. So in the next few minutes, I'll help you understand the business model of EID Parry and why top fund houses like Quant and Parag Flexicap have added it in their portfolio. This would be very interesting analysis, so watch this video till the end. But before we proceed, let me clarify that in case you are looking for massive return in no time, then you can skip this video. EID Parry is not a hot stock. It is actually a great value pick with consistent compounding to consider it in your core portfolio for long-term wealth creation. So make sure that you keep the expectations right and please do your own research before investing your money. Alright, let's get started with the video. To begin with, EID Parry is basically a sugar manufacturer. Now you would be surprised to know that it is India's first sugar company to manufacture sugar in 1842. That's more than 150 years ago. So EID Parry was established in 1788 in Chennai and is part of Murugappa Group, one of the most reputed business group in India that owns many other listed companies like CG Power, Tube Investment India, Cholamandalam Investment and Finance, Coromandel International and so on. Basically, EID Parry has 3 main business verticals. First is sugar. EID Parry sugar is sold across your commodity market as well as large institutional customers. Second is power. Company has 6 sugar plants that collectively produce 140 megawatt of power. While company uses this power for its own usage, surplus is sold to state electricity companies or private energy players. And third vertical is distillery. Company has 5 distilleries with a total capacity of 417 kiloliter per day, where it produces ethanol and extra neutral alcohol. Out of this, nearly 66% business come from sale of sugar, 28% from distillery, and around 6% from others including power and nutraceutical. Now if you observe, you would get the reason why EID Parry commands a very low PE multiple. It's because its sugar and distillery business are essentially commodity business where there is no command over the pricing. It is based on supply and demand. Moreover, the margins are also in single digit due to wholesale business. But the biggest factor for low PE multiple is due to the cyclical nature of sugar business. Since sugar prices are dependent upon supply and demand, companies' margin fluctuate based on that. And hence, market do not like to give a premium valuation to EID Parry. Then why did Parag and Quant Mutual Fund are bullish on the company? It's because of company's transition from wholesale sugar supplier to a retail focused company. As discussed, the biggest pain point of EID Parry was its commoditized sugar business that is susceptible to cyclicity based on supply and demand. And that's where a few years ago, company decided to reimagine its business model and added 4th vertical of retail sugar along with non-sugar products. This slide shows some of the pictures of EID Parry retail sugar division in modern outlets. And this slide gives a clear understanding of premiumization trend in sugar segment. While loose sugar is priced between 33 to 35 rupee kg, packaged sugar is priced at 45, branded white sugar 60, natural brown sugar at 100, jaggery 110, and low glycemic index sugar at 120 rupee. And company intend to upgrade consumers to high price point and larger brand. Interestingly, this retail sugar volume has grown at 33% CAGR rate in last 5 years. So this shift in business from commoditized wholesale sugar to branded packaged sugar for the retail segment not only gives better pricing to the company, it also reduces the dependency on the cyclicity business of the wholesale sugar. And that is the key for valuation re-rating. Not only that, the last few years of transition into retail sugar business has opened new avenue of the entire packaged food industry for the company. That's where EID Parry now want to become an essential brand in every home's monthly shopping basket with a significant share of wallet. More of a FMCG company. For instance, company has already started going beyond sugar and introduced product in food category like millet, pulses and rice. In the latest presentation, company mentioned that trial launches executed in Chennai and other Tamil Nadu market between July 23 to December 23 that culminated in the commercial launch across Tamil Nadu in January 24. Then in April 24, it got launched in Andhra Pradesh, Telangana and Karnataka. Currently, products are being sourced directly from the millers with a plan to go up to the farmers soon. The most interesting part is that product development for several new products is in the innovation pipeline with straight grains and value-added category like ready-to-cook, health mixes, millet-based idli soda batter and more. So if EID Parry can successfully transition to retail-focused FMCG company, we'll all know what kind of PE FMCG companies command. Company's chairman in its annual report mentioned that the EID Parry of the future is to be largely positioned as a bioenergy, food and nutrition company. This reimagination will help de-link your company from cyclical and tightly controlled aspect of conventional sugar industry and will empower it to compete and succeed based on the strength of its business model and capabilities. In view of this, your company is headed towards a sustainable multi-year growth phase, transforming from a single vertical of sugar to multiple verticals like sugar and sweetener, bioenergy, food and nutrition, making it increasingly intrinsic in all our lives. Then company's MD mentioned that if I have to concise my communication in a few words, there is no growth limit at EID Parry. Now to expand its retail business, company needs to expand its distribution network. And that's where EID Parry distribution network has expanded from 38,000 outlets in FY22 to 78,000 in FY23. Company is aggressively expanding its presence and aspire to reach 1.5 lakh outlet in near term and 50 lakh outlet in the medium term. Their share of branded sugar has already grown from 7% to 30% in last 7 years. Apart from sugar premiumization and packaged food, EID Parry is also focused on biofuel. You'll be aware that Indian government has big plans of 20% ethanol blending with petrol and diesel, and this has resulted in sharp growth for sugar companies in the past. However, recently Indian government temporarily banned the production of ethanol from sugar, and that impacted sugar companies' share price. But I believe that this is a temporary ban. After election, this ban should get removed, so there is good scope for growth in biofuel space that represents 28% of EID Parry's business. Company has doubled its capacity from 297 kiloliter per day as of December 22 to 582 kiloliter per day by April 24. On top of this, company has been taking many steps to reduce its operational cost. Company's leadership has mentioned that we are undertaking a plethora of initiatives at an organization level to unearth opportunity for efficiency improvements and cost control through innovation across farm to fork value chain. I am pleased to communicate that these initiatives which have been launched are being scaled and the time will soon come when the company's direct exposure to commodity sugar market will have been reduced to a single-digit percentage of overall revenues. This transformation will not only moderate the variable within our control or business, but will lead us from a relatively small play within India's food sector to an ocean of possibilities. Management further said that company is at an inflection point. From a company with commodity-driven personality, we are becoming a consumer-facing organization. From a significantly wholesale orientation, company is moving towards sweetening India. Through the coming together of three enduring and profitable dimensions, bioenergy, food and nutrition, we are attractively placed to capitalize on the mainstream themes of a modernizing India. Folks, I would really encourage you to read the initial few pages of company's 2023 annual report that include the letter from top leadership. You can also go through company's latest investor presentation. Management mentioned that over time we will extend this capability to a range of food products not necessarily manufactured by our company and that carry our brand and assure consumers of our quality validation. This will graduate our company from a small size of a homemaker's budget to a larger proportion, say 20% to a family's kitchen spending. Company is transforming from manufacturing-driven business to distribution-led growth strategy and would leverage its more than 200 years of brand trust to build its retail business. Like I said earlier, it won't be an overnight transition. In fact, this transition has been happening since last 5 years, and now company's management is showing optimism that company is at an inflection point. Okay, you might ask, Sahil, what is the guarantee that EID Parry would crack the retail sector with its packaged sugar and other food products that it intends to introduce in the future? That's where the promoter pedigree comes into picture. Being a part of prestigious Murugappa Group, EID Parry has the best promoter pedigree along with the best leadership team that you can ask for. And I always say that I give very high importance to promoter pedigree and senior leadership. And for EID Parry, you can't ask for any better leadership. And that is another reason why institutional investors are bullish on the company. So I hope you got a fair idea why mutual funds like Parag, Parekh and Quant are bullish on the company. Now if you look at company's financials, company has been growing at a steady pace in the last 10-12 years. Actually, the revenue growth during 2012 to 18 was on slower side, but between 18 till now, revenue has doubled. Company's margins were on lower side during 14 to 16, but it got improved. Although there is a slight fall from peak margin. Net profits have also grown at a very good rate in last few years. There's a more than 3x time growth in profits. Although FY24 revenues are down as compared to 23 and net profits are also down. If you look at company's balance sheet, it is sitting on 2,900 crore worth of cash and cash equivalent. Company's fixed assets are also growing. If you look at company's cash flow, it is generating high cash from operation. If you look at profitability, company commands an ROE of 13.7% and ROC of 20.5%. Its debt to equity is just 0.25 and today it commands a market cap of 11,200 crore. As far as valuation is concerned, it is trading at a P ratio of 12.5, EV to EBITDA of 3.5 and price to sale of 0.38. So there is still a lot of valuation comfort and good margin of safety. If you look at shareholding pattern, recently DIs have increased stake in the company big time from 4.9% to 11.88%. It includes SBI Magnum Children's Benefit Fund that itself suggests SBI wants to keep EID Parry for long term. Then Parag Flexicap has invested in the company in March quarter, Quant smallcap invested in December quarter and increased stake in March quarter. And public holding has reduced from 44% to 37%. Now what is the risk and growth thesis? So currently there is still a lot of dependency on wholesale sugar sale. And FY24 witnessed slowdown in company's top line and bottom line due to factors like higher can cost, temporary ban of ethanol production from sugar and so on. So this cyclicity would still persist in the business until it significantly reduces its dependency on wholesale sugar business. Another risk is failure in business transition. While EID Parry is very confident of transition from wholesale sugar company to a retail focused company, this transition won't be easy. Also, the space is very competitive with many established players like Tata Consumer, ITC, etc. Any failure in business transition can negatively impact company's growth prospect. So this is the fundamental analysis of EID Parry where Parag, Parry, Flexicap and Quant smallcap have added in the portfolio. It's a very less discussed company in the street, currently trading at a PE of just 12-13 and price to sale of just 0.4. Company is transitioning its business model from wholesale sugar to bioenergy, food and nutrition company. Especially its wholesale sugar to FMCG business transition is very interesting. Company is one of the best management team that you can ask for. And that gives a good confidence that company can actually do this transition. So it looks like an excellent value pick and worth keeping a close eye. As I mentioned earlier, this transition is happening slowly and the results would be reflected over time. So this is not a hot stock, but an excellent value stock in my opinion. Now tell me in the comments, what do you think about EID Parry? Is it worth investing your money? If you find this analysis useful, do share it within your circle. I'll see you next video. Till then, take care.